If you just sold your business for $500,000 or more, the biggest money mistake may not be buying something flashy. It may be moving too fast, investing too quickly, paying off debt without a plan, giving money to family before you know what you need, or spending as if the sale price is the same as the money you get to keep. This video is especially for someone who recently sold a business, expects to sell a business, or just received a large payout and wants to avoid costly mistakes. Hi, my name is Tommy Cloud. I am a CFP and qualified Kingdom advisor, and I'm the founder of Third Act Retirement Planning, a company that I started back in 2000. I help people who receive $500,000 or more in sudden wealth make wise financial decisions before taxes, family pressure, and rushed investing create costly mistakes. Today, I want to walk through the key decisions you should slow down and think through after selling your business. Keep in mind that this is educational, not personal, financial, tax, or legal advice. Your situation may depend on the sale terms, tax rules, your retirement needs, and your broader financial plan. We're going to be talking about the 5 decisions that demand your full attention. And those are going to be: know your real number, protect before you grow, answer the income question, manage family pressure, and build a coordinated plan. Let's go ahead and start with number 1. Do not treat the sale price like spendable money. If you sold your business for $1 million, that does not mean you now have $1 million to spend. There may be federal taxes, state taxes, closing costs, debt payoff, deal expenses, or future payments tied to the sale. Some business owners receive cash at closing. Others receive payments over time. Some deals include an earnout. Some include seller financing, and some include stock. Each of these can change the tax picture and the risk. A common mistake is making big promises or big purchases before you know what you actually get to keep. Before you spend, invest, give, or pay off major debt, get clear on the after-tax number. All right, decision number 2, protect the money before you try to grow the money. After a business sale, many people feel pressure to, quote, put the money to work. That sounds responsible, but moving too fast can create tremendous problems. Don't test me on that one. Trust me. I've seen people invest large sums quickly, story after story, and then they panic when the market drops or they find out the investment was actually a scam, because there was never really a plan. They didn't consult other people and try to gain wisdom. They want to do it all on their own. They may have been great at running a business for decades, but are they great at investing? The first goal is not to find the perfect investment. The first goal is protect the money while you make clear decisions. That may mean keeping part of the money in safe, liquid accounts while your plan is built. You need to know how much cash you need for taxes, living expenses, emergencies, and any short-term goals. Then you can decide how much money is long-term money. Those 2 buckets should not be treated the same. Decision 3, do not skip the retirement income question. Many business owners sell their company and think, now I'm done. But the real question is, can this money support the next chapter of your life? A business may have paid your salary, covered certain expenses, provided health insurance, or funded your lifestyle. Once the business is sold, that may stop. So you need to ask, how much income do I need each year? How long does this money need to last? What happens if markets fail? What happens if taxes are higher than expected? What happens if I want to help children, charities, parents, or employees, or friends? A large sale can feel like more than enough money, but without an income plan, it can shrink faster than expected. And again, this is something that I've watched firsthand. People felt like they had enough money, and then they got down the pathway and they realized that their spending plan had to be dramatically changed. Decision number 4, be careful with family pressure. We talk about this on this channel time and time again. When people know you sold a business, they may assume you are now the family bank. We talk about Jimmy Buffett's song Fins, where those sharks are circling that boat. And you may hear from your family requests for loans, gifts, help with a house, business idea, college costs, or debt payoff. And one of the ones that I'm usually most in favor of if someone really has a lot of money is if a family member has gone through college, graduated, and they have student debt, it's this reasonable student debt, they didn't choose to go to a inappropriate college, then I'm all in favor of paying that down since they've already gotten the degree, particularly if it's a useful degree. So some of those requests may be reasonable, but they should not come before your own plan. I've seen people give large amounts to family before they knew whether their own retirement income was secure. That creates stress later. Wise answer for your family may be this: I'm not making any major decisions until I finish my financial plan. That gives you time, it gives you structure, and it keeps emotion from driving the decision. Decision number 5, build a coordinated plan before making major moves. After selling a business, you may need an accountant, estate planning attorney, and a wealth manager or financial planner working together. Why? Because one decision can affect another. God is clear in his word in Proverbs. It says there is a victory in a multitude of counselors. So you want multiple types of experts helping you with this wealth. That's wisdom. Selling investments may affect taxes. Paying off debt may reduce liquidity. Gifting money may affect your estate plan. Buying real estate may affect cash flow. Retiring early may affect health insurance and income planning. This is why business sale money needs more than a quick investment idea. It needs a full plan. For example, before investing the proceeds, you may need to know how much to reserve for taxes, how much to reserve for income, what level of risk is appropriate, whether your estate documents are current, and what decisions are urgent. That is not something to guess through. All right, so let's go ahead and recap. If you sold your business for $500,000 or more, avoid these mistakes. Try not to treat the sale price like spendable money. Do not rush into investments is number 2. Number 3, do not ignore the retirement income question. Number 4, do not let family pressure drive your decisions. And finally, number 5, do not make major moves without a coordinated plan. Money from a business sale can create freedom, but only if handled with care. If you recently sold a business for $500,000 or more and you're not sure what to do next, you can apply for a sudden wealth planning session using the link in the description to this video. On that call, we will walk through what you receive, what decisions may be urgent, what tax or retirement issues may need attention, and what your next wise step should be. This session is not for someone looking for a hot stock tip or a quick answer. It is for someone who wants a thoughtful plan before making major decisions with sudden wealth. If you like this video, please go ahead and hit the like button. Additionally, you can subscribe to our channel for more videos like this and helping you be a better steward of the money that has been entrusted to your care. We'll see you on the next edition of Sudden Wealth Stewardship.